provisions which affects the working of brokers and our member fraternity. Keeping this objective in mind, we have dedicatedly have two experts who will explain us the nitty-gritty regarding the new Companies Act 2013. Before I invite them, I would just go through their profile, which is quite impressive. Today we have Mr. Atul Mehta from Mehta and Mehta. He is a law graduate and fellow member of Company Secretary Institute and is practicing Company Secretary and founder partner of Mehta and Mehta Company Secretaries. He is in Company Secretary field for the past 19 years. Initially, he served the industry for 6 years as Company Secretary and also headed the legal department. Thereafter, he laid his pioneering step in the era of consultancy and practice, and from last 11 years, he is a whole-time practicing Company Secretary. He is actively associated with the Western India Regional Council of Institute of Company Secretaries and is a Central Council member of ICSI. Not only this, friends, but he is also a regular faculty member for several training programs at WIRC of Institute of Company Secretaries. He was past chairman of Western India Regional Council of Institute of Company Secretaries, and he is also on the board of various companies. Mr. Mehta is currently chairman of Financial Services of ICSI and also co-chairman of CCGRT of ICSI. With this humble introduction, I request Mr. Atul Mehta to come out and carry his presentation.
Good evening, friends. It's my pleasure to be here in this broker forums. And let me thank Siddharth Shah, Chairman Brokers Forum, CEO of WISPI, and Dr. Aditya. Aditya just introduced me. Friends, I was told that we have only 1.5 hours. So what I'll do, probably I'll give you the broad I'll just give you the bird eye view of a Companies Act 2013, and my colleague, my partner, Anshul, will touch upon those aspects of Companies Act, which is going to be directly touching to the broking company. And this, of course, everybody is discovering, and I think all of you are aware that these rules got implemented sometime 1st April 2014. So many of the professionals like company secretary, chartered accountant, cost accountants, they're trying to discover and they're just trying to find out how those is going to be applicable or it's going to affect them also in a day-to-day life. So I'll just start with my presentations. Of course, this is what we were all waiting for this companies bill for a quite long time. As in Company Secretary Institute, we have held so many programs. Of course, it has started with something like 2003, then 2008, 2009, 2010. You will not believe it that we have organized something more than 500 program on those companies bill. Sometime in 2003 and 2008 also, probably we have organized more than 1,000 program because we were told that this bill is going to get passed in another 6 months or 1 year. But unfortunately, whenever any of those ministers wanted to introduce this bill, the government failed. It has happened twice. And there are something like, of course, all thanks to this gentleman and this gentleman also. Of course, the only person in India, he is, of course, Supreme Court, contempt of court, like probably it has happened twice. And of course, now he's in the grip of Supreme Court. He has done twice, a contempt of court of Supreme Court, and he was just moving free. But now, of course, he is behind bar. And friends, I don't know how many of you are aware, the contempt of courts of a Supreme Court, the penalty or the violation if you are doing, then it is something like a 6-month imprisonment or fine of only 2,000 rupees. So probably somewhere this act also has to be amended. How importance was given to this bill? Of course, all of us, we know that 18 December it got passed. this bill was taken sometime in the evening at 7 o'clock. I was, most of the professionals, they were observing this. And they were out of those 500 plus member of parliament, only 25 member of parliament were there to pass this Companies Act 2013, I mean, this is what, our member of parliament probably gives the importance to this act, which is going to affect the corporate world of India. And of course, I think, you had only 4 hour discussion on this Companies Act, when this was getting passed at the parliament. And, they have not spoke anything except the CSR. Probably our member of parliament only understood from this Companies Act only CSR. So many changes. Of course, there are side effect or direct effect, indirect effect of the Sahara and Satyam also. Of course, 4 ministers tried. All of us know Premchand Gupta, Virappa Moily, Murli Devra, and the last gentleman, Salman Khurshid. The 4 ministers they tried. Unfortunately, none of them could be succeed. But then, thanks to this gentleman, 37 years old, Sachin Pilot. Of course, being a Central Council member of ICSI, we were very closely working with the Ministry of Corporate Affairs. Let me tell you one thing, friends. The way, whenever I used to meet this minister, the kind of assurance we got, and he is the minister who probably understood the whole act. So whenever you talk any provisions of the company law, probably you get you understand that you are talking to somebody who understands. Probably all those 4 previous ministers, as I said, probably they have not understood the act, or probably they never took a lead to understand. But then Sachin Pilot has made it sure that this act get passed. He has taken a lot of pain. He was just sharing a views that, when this 1956 Act, Companies Act got passed, there were only some 14 parties were there. But now when this Companies Act, new Companies Act got passed, there were something like 40 parties, and it has gone to twice to the standing committee. There were more than 100 suggestions were there, and out of which, 90% of the suggestions been accepted by the committee. Anyway, I'll just run through this. This got passed sometime 18th. Probably why India need the new Companies Act, because of the faster growth, better joint venture, facility restructuring. I'll just run through it. I'll touch upon this is going to affect more than 12 lakhs company across country. Now, if you see this, I have some statistic of the companies. Now, Maharashtra has the highest number of companies. Then the second is Delhi and the West Bengal. So, I mean, it's almost, if you total it up, they cover almost 2/3 of the total companies. This is some statistic about which shows, the company which is active, inactive. Okay, now, just to give you the bird eye view of the Companies Act, they say, this Companies Act is simple. They wanted to make it simple. And, of course, if you read 1956, if somebody is to understand the appointment of the managerial personnel, he has to refer to some 4 or 5 sections. But now in this new Companies Act, you have only one section where you can refer and you can understand the appointment of a managerial personnel. So what they are saying that, it's simple, but then through rules, they made it so complicated. Of course, it will improve the corporate governance, provide for the more powerful insight. There is something, which is, I don't know, this is emerging, what we call as a class actions, where, some number of members, they come together, file a case either against the auditor of the company, either against the directors of the company, or, any of those, the officer of the company. So, there is a provision in the Act which says, something like 100 members, the shareholders, they can come together and, they can initiate the actions against those officers or auditors. Okay, now you have a reservation for the movement directors for a specified class of companies. Independence directors been given more independence, but they made it more complicated. Limit the terms of the independent directors. CSR, I don't know, it has been much talked about, and probably CSR is the only rules which came out first, then the other rules came. Improve the quality of the financial reportings also, and the limit the terms of the auditors. The auditors, terms, I think all of you are aware that, the rotations of the auditors, 5 years plus 5 years if it is the more than one partners. Silent Future, 29th chapter, I'll just run through fast because there is something called an entrenchment provision in the Article of Association. Friends, when any of those joint venture companies, they come to India, I mean, whenever they are coming to India, they always finding it difficult because, they wanted to have their joint venture agreement clause to be inserted in the Article of Association. For example, like, if it is a 50-50% partnership, they wanted 2 directors from, say, A group and 2 directors from the foreigners. So they wanted to have a 4, to be a quorum of the, for the board of directors meeting. But now they cannot have this clause because there is a section in the Companies Act 1956 which says if it is anything contrary to this Companies Act, which will be null and void. So there was some kind of a restrict. So if you are keeping anything in an article which is more stringent than the Companies Act, okay, so this will be null and void. For example, the board of directors meetings, the quorum is 1/3. So if I have 9 directors, so the quorum is 3 directors. But suppose joint venture partners wanted to have something like 2 partners and 2 directors from A group and B group. So I need to have at least minimum quorum 4 directors, which if you put it in articles, it will be null and void. But now, through this new Companies Act, you can have this kind of a provision, more stringent provision than the Companies Act. So you can have articles more stringent than which is provided in the Companies Act, which is a very welcome the thing. Corporate social responsibility, everybody knows this. I have a separate slide for this. Mandatory rotation of auditors for a listed company, 1 movement directors for a class of companies, nomination and remuneration committee, stakeholder relationship committee. These are the committee which is they mandated that all those listed company they should be having this. And there is a concept called a registered valuer. So at any point of time, suppose if you have a company which wanted to change their object clause. I think in the recent past, all of you are aware that many of the companies they have changed their object clause and they become a real estate companies. You have a company like Standard Industry or Piramal companies, which were otherwise was a textile company, but now they have changed the object clause to a real estate company because the only left was a real estate. So if you are changing a object clause, if you have any dissenting shareholders, okay, you have to buy it out or you have to pay them, and somebody has to value the shares, and there is a concept called a registered valuer. So there are certain class of people who have been recognized as a valuer. Some more major amendments. Earlier the private limited company used to have only 50. You can have only 50 members. Now they have increased to 200 members. Further issue of share capital. They made it more restrictive, very similar to SEBI ICDR Act. Purchase of the minority shareholding, as I said, like any of those dissenting shareholders at any point of time, if you are doing something, or particularly changing object clause and all, you have to buy out those minority shareholders. Company liquidators is a new concept. Association of person, the number has been increased. In many places, they've introduced this e-governance. So, for example, the annual general meeting, you'll start receiving through email. Something very similar, you also have e-voting. So, all those listed companies, they need to have a compulsory e-voting now from the 1st April 2014. So, things are emerging. Earlier they had a difficulty implementing those 1956, but this e-voting is almost been practiced in those UK and USA. So now, of course, through this 2013 Act, they made it mandatory. Okay, see, there is a provision in this Companies Act which says at any point of time, if there is any change in the top 10 shareholders, this is, this will occupy the company secretary more. What it says, at any point of time, if there is any change in the top 10 shareholders, of course, you are intimating to the shareholders, BSE, Bombay Stock, if your company is a listed company, you are intimating to the stock exchange. You are also supposed to intimate to the ROC. Now, this is something which is new, which I'm still not been able to understand why this ROC wants those informations. Of course, ROC you have all this information, through annual returns where we give all this, information about the directors, their shareholdings and all. Again, some more features. See, there are 416 places. It says, as may be prescribed. So the whole Companies Act, will be functioning on the rules. So each chapter, there is a rules. And probably those who are, practicing in the FEMA side or, FEMA again, they have a circular, they have a master circular. So this keeps on changing. Something very similar. We'll have all these rules, will keep on changing. Those limits, they will change through the rules, So they will, at any point of time, if they wanted to increase or reduce the limits, they will put it for a discussion, and within 30 days they will try to implement. So this is what they have 416 places they have said as may be prescribed. Rules making, they've already came out with so many rules also. And 74 places it says they have simplified. Rather they have a more, what they are saying 74 places you require the special resolution. So you require more than 75% approval of the shareholders. 15 occurrence, again, you need to go to the central government. Somehow the objective, they wanted to change the act because, they wanted to have a less government control. But, if somebody reads the whole act, 15 place they said, you need to go to the central government for the permissions. There are so many new definitions has been added. I'll just run through it. Now you see, you also have a financial year. Now for all the companies, you need to have a 31st March as a financial year. So those companies used to have the September or December, they need to change, and they have to, change their financial year to 31st March. Now it is compulsory. And one-person company, which is something new, which my colleague, Anshul will take it up. Probably, see, in this new Companies Act, there are so many compliances. And, as I said, rather than, making it simple, they probably made it more complicated. And friends, this violation, at any point of time, even if you have a small violations, the minimum penalty is something like a 25,000 rupees. Okay, so even if you are running a private limited company, earlier the private limited company used to have so many benefits. Okay, you don't have to go to the shareholders for the permission. Only those directors or members, they used to take it in the board meeting and used to run the company. But now there are so many provisions which are at par with the public limited companies. So probably we as a company secretary, we feel that many companies will come to us for closing down the companies, because running a private limited company is going to be more difficult nowadays, and you need to have a more compliance. So with respect to husband and wife, you are there, but then somewhere there are compliance we need to, which if the director has to make sure that they comply those provisions. There is a concept of a small company. So either you change your private limited company to small companies. Okay, where the small, when you say a small company, where the capital is around say 5 lakhs and the turnover is around 2 crores. So I have a separate slide on that also. Turnover also has been defined. Independent directors, there is a separate provision. Related party transaction has been much talked about. Some new concept. Auditors, I have a separate slide on this. I'll just run through this. Okay, now this is how it looks. There are, in the old act, there was something like a 13 chapter. Now in this Companies Act 2013, you have a 29 chapters. There were 658 sections, 470 plus. If you count those rules, it goes beyond 658. Anyway, I'll just run through. Now, of course, public limited company, of course, it is same as it was there in the earlier Act 1956, which says the minimum paid up capital should be at least 5 lakhs. And it also says that, subsidiary of a public limited company will be a limited company. Private limited company, they still retain, except that, the number of members earlier, you can have a maximum number of shareholders, 50, but now they've increased to 200. Okay, one-person company, suppose, if I wanted to start a one-person company, it will be like, Atul Mehta, of course, the name of the company will be Atul Mehta Private Limited Company. Into bracket, somewhere you have to write, it will be OPC, that is one-person company. For this also, you need to have you need to have another person consent. In case of, Atul, the first person dies, there is another person who will take over this. So you need to have a one-person consent. So in case at any point of time the one person dies, you have other person who takes over. So it says something like this: prior written consent of the other person in prescribed format you need to have. Okay, many consequences. Of course, OPC company, you do not have to have these shareholders meeting, and you can have only one directors also, not required to hold the annual general meeting. So if you ask me, many company will go from a private limited company to one-person company. So again, there are very less compliance in case of a OPC. Small company has been defined, which says the capital should not be exceeding 50 lakhs of rupees, and the turnover should not be and of course the minimum is 50 lakhs and maximum is 5 crores, and the turnover should not, minimum is 2 crores and which can go up to maximum to 20 crores. So this will be classified as a small company. Now for a small company also there are less compliance. So something very similar, AGM and for the board of directors meeting, you have a less compliance. Okay, and even for annual return also certification, you're not supposed to take anybody's certification also. Only the directors can sign, and it goes to the registrar of companies. Of course, see, if you ask me, there are something like a 12 lakhs plus company across country, out of which there are something like almost 7 to 8 lakhs companies are almost dormant companies. Okay, so what they came out with a new provision in the act which says, if your company is hardly operative or is just existence, and it is there just to hold the property or your intellectual property or just real estate property, you can go to the registrar of companies and file a form and say that yeah, this is a dormant company, and you hardly have to file any of those returns and the other forms. So and the registrars, after taking the application, they will make a note of it, and probably you're not supposed to do more compliance on that aspect. So a dormant company has been defined, hardly operative except those filing those one or two forms across, in a year. You're not doing any other activity, so you have a less compliance. Okay, now see, I'll just touch upon some important provisions, which is something new. Of course, everybody knows we have this Sahara case which is going on. Unfortunately, Ministry of Corporate Affairs, they wanted to attach the assets of the Sahara. But there is no provision in the Companies Act which gives the power to the government to attach their property. So now in this new Companies Act, there is a provision for the attachment of the assets, and see how it has been drafted. It says at any point of time where it appears to tribunal. So like how you have an income tax tribunal, there is something called a National Company Law Tribunal under this Companies Act, which says at any point of time where it appears to the tribunal on a reference made by the central government or by the inquiry or investigation of affairs by the under these chapters, under this Companies Act, or any complaint made by such number of members, as I said, class of people. So maybe those number of persons can come together, can make a complaint to the NCLT, that's a National Company Law Tribunal. Or it says a creditors having, now this is something which is very dangerous, which says any creditors owing more than 1 lakh of rupees, they can go to the tribunal and say, look here, I have a 1 lakh rupees outstanding, and I believe that there is something wrong which is happening in the company. Okay, and the promoters are trying to take out their assets, money, and blah blah blah. He can go to the NCLT and make a complaint. Okay, and on the complaint, probably NCLT can freeze the assets of that company. Now this is something dangerous because 1 lakh is a very small amount as per the current, and probably somebody has to create a nuisance value, he can do this. Okay, so now this is what we have suggested ministry also, that 1 lakh should be increased to something like a 10 lakhs or 25 lakhs, but not at 1 lakh. So anyway, it is still retained. Maybe sometime next amendment they will change. So at any point of time, so any creditors can go to the NCLT and say, look here, I'm a creditors of this company, and I believe that something is wrong which is happening in this company, and please freeze the assets. So any of this, so either on the investigations, any of this, through any of those government income tax investigations, or any investigation under the Companies Act 2013, or any request. And there is another word which says, any other person having a reasonable ground to believe that. Now this is again, they've used very loose language. We says any other person. So probably, I don't know how this will take a shape in the future, but again, we'll have so many people who create a nuisance value. So any person, probably you'll have some letters going to the NCLT and say, look here, there is something wrong which is happening with the company. And it says, the NCLT on the applications will stop, removal, transfer of the disposal of the fund, and they can freeze the assets for maximum of 3 years. That is what it says. At any point of time, if any of the officer do not follow the orders of NCLT, there is a penalty of 1 lakh and 25 lakhs maximum. Now, there is another definition which talks about the officer in default. Now, this is again a very dangerous, which says the officer in default for this Companies Act 2013 means the first is the whole-time directors. Number 2 is a KMP. The key manager personnel, again, there are 3 categories of 3 personnel. This includes the whole-time directors, a company secretary and CFOs. And where the KMP is appointed, any directors who has given the consent in writing otherwise. So at any point of time, if you have any kind of a violations under this Companies Act 2013, I think the whole-time directors will be the first person will go behind the bar. Number 2 will be your KMPs. Number 3 will be any directors who has given a consent that I'm going to be taking care of the Companies Act 2013 compliance. So if you have something in a writing, then he'll be the 3rd person who will probably go behind bar. And there is another provision which says, if you have somebody controlling from outside, that person also can be held responsible or he can be part of this officer in default. What it says, any person who's advise the directors or the instruction, the board of directors of the company accustomed to act. So they've covered them also. Now the one which I have highlighted in the red, now this is for those directors. See, at any board meeting, any directors who was not present, but in that meeting, something those other directors, they pass any resolution which is against the law. Okay, and this particular director was not present at that point of time. And in the next board meeting, when he receives those agenda and the minutes of that the previous meeting, and if he doesn't object, I'm just repeating this word, if he doesn't object, then he's also part of the OPC. Okay, so ideally he should have objected this, this is against my will, I'm not party to it. And as a company secretary or as a professional, you have to be very careful drafting the minutes book. Okay, because at any point of time, the ROC may ask you, or the ministry may ask you, or a court may ask you to produce those minutes. So, somebody have to make a note that so-and-so directors was not party to this, or he did not agree to this particular agenda item. If he would have agreed and tomorrow it works out to be something illegal, which is not as per the law, he is liable as an officer in default. Even the registrar and transfer agents, they made a part of it. Okay. And they've gone beyond. Of course, now the 1956, there was always a confusion about who's the promoters of the company. Now in this 2013, they've clearly defined who are the promoters. What it says, those who are named in the prospectus as a promoters of the company, who are the control of the affairs of the company directly, indirectly, whether as a shareholders or a directors or otherwise. See the kind of a drafting, they've used. Okay, directly, indirectly, or otherwise. And they also said, in accordance with whose advice, directions, the instruction, the board of directors of the company is accustomed to act. Now, those people, they are also been said as a promoters of the company. And again, provided nothing will apply to the person who was acting as a professional. So those professionals like chartered accountants, and they are exempted from this category. Now, earlier 1956, we used to put so many object clause in the memorandum. Now, you need to have only one object clause which says, object clause has to be divided into 2 objects to be pursued at the time of incorporation, that is main object, and the matters necessary for the furtherance of the. So we are talking about only one object. So you cannot have a multiple object, doing a textile, real estate, and so many other things, Now, entrenchment provision, which I said, I've already discussed this. Now, Streaker, the criteria for the independent directors, my colleague, he has a detailed presentation on this, but it says should not be related to the company, its holding company, subsidiary company. If I wanted to be independent directors of any of the company, I should not be connected to their, holding company, their subsidiary company, their associated company, their group companies. I should not be having any kind of a material or precautionary benefits from those companies. Then otherwise I lose my independence. Of course, in this new Companies Act, they've used this e-governance. Okay, so you can have those books of accounts in a IT, the thing. You can maintain all your records in the computers. Okay, and at the same time, notice of the board meeting and the shareholders meeting will be through email. Incorporation of the company now, they made it more stringent. So anybody and everybody cannot now incorporate the companies. There are more stringent rules which has to be followed. So declaration by the professional engaged for the purpose of the incorporation of the company, that the company has complied with all the provisions. At the same time, the person who is incorporating a company as a director, he also has to give a declaration that, look here, I do not have any disqualifications, or I have not been, I have not found any guilty of any fraud, misfiances for last 5 years. And he has to give an affidavit that he has not been convicted of any offenses connecting with the forming or managing the company. Okay, so this is what a disclosure requirement every company. Now probably Anshul will see from the 1st April 2014. I think all the company has to write. They have to change their letterheads, and they have to write their company name, all those details. Of course, the fax number, email ID, and addresses. But over and above this, they need to write their CIN number. That is company identification number in all their letterhead and all their communications. So even if you are sending the broker notes, you need to have a CIN number in that. So probably Anshul will dealt in details. But that there is a penalty. So if anybody founds a letterhead without that seen today, so probably ministry can fine you up to maximum is 1 lakh of rupees. So to be very careful. So many provisions of the Companies Act, they have started touching our life. So you need to have somebody who should guide you. That yes, look here, these are the Companies Act, provision which has started affecting the company from the 1st April 2014. Okay, now, as I said, if you're altering your object clause, so you have a textile company, you are changing your object clause to a real estate. Now see, in the recent past, you have 2-3 companies like Raymond's has amended the object clause. Raymond's, which is a very well-known company, and now they have, I think last year they have changed their object clause, which they have added, into their object clause for the real estate. Included the real estate development also as a business. Standard Industry, of course, everybody knows it is a Mafatlal company, but now that company, it is not a textile company, now it is a real estate company. Even the Piramal Health, healthcare also has added new object clause. Now, so at any point of time, if you are amending your object clause after 1st April 2014, you need to, at any point of time, any of those shareholders, if you are dissenting to it, you need to buy out their shares at a valuation which has been valued by the valuer. Of course, you cannot have a shares issued at discount. There is a specific section in this Companies Act 2013 which says you cannot issue a shares at a discount. Of course, bonus shares, earlier, people used to declare the bonus and they used to withdraw. Now, there is a specific provision in the rules which says, the rules 14, the bottom of the slides, which says the company which has once announced the decision of its board recommending a bonus issue shall not subsequently withdraw the same. So, again, you have to be very careful. And of course, no company can declare a bonus unless and until, he complies those provisions. He has not defaulted in any of those, the employees' statutory dues and all. Of course, now the annual returns, of course, all the company, irrespective of one-person company, small company, large company, listed company, non-listed company, foreign company, all this company, they have to file an annual return once in a year. Now, if somebody goes through the annual return, it's a very detailed annual return, not like the 1956 annual return. And probably, let me tell you one thing, even if you're a small private limited company, your annual return will run into something like I would say, 40 to 50 pages. And if you're a listed company, probably it will go beyond 100 pages. They've asked, plethora of informations. Okay, so I think, if you have a chance to go through it, please go through it, because, it talks about so many things. It talks about even, if you have a whole-time directors in your company, what is his salary, so his income tax, probably the form number 16, you're supposed to give in this annual return. So all your top, directors, the whole-time directors, those remuneration detail has to be reflected in the annual return. Now see, friends, here also, many of the big corporate house, they've objected to this because, I think all of you are aware that the director's report, there is an annexure which gives the list of the employee who draws beyond, X amount. Okay, they wanted to remove from there, but unfortunately, they've added to this annual return. Now, what it says, if you have a whole-time directors and if you are paying a remuneration to those, directors and KMPs also. Now, we are talking about KMPs also. So those remuneration details, basic salary, all those, how have you given form 16? So it is very similar. You are supposed to give in the annual return. Now, as I said, many of the big corporate houses, they've objected to this because all your, key managerial personnel, all your big, the top class employees, their salaries, out in the public. So probably you have some recruitment company or a headhunters, they'll be keeping a track on your top executive, probably your executive will very easily get headhunted. Okay, so which otherwise, nobody was used to know about the salaries and all. Anyway, so remuneration of directors and KMP, penalties levied. So at any point of time, if say basically annual return, if somebody picks up the annual return, he will know everything about the company. So whether is there any penalty been levied under this Companies Act 2013 to any directors, to company or to KMPs, all those details will have to be reflected in this annual return. And okay, now it also talks about, now see, annual return will have to be, you need to take a signature of a PCS. Okay, so other than those OPC company and your small company, and if you are not employing a full-time company secretary, you need to take a signatures of a PCS on that annual return. Default, again, minimum 50, maximum 5 lakhs. If you are giving any kind of a wrong information in the annual return, even a small, as I said, like, they have asked plethora of information in that annual return. So it is very likely, even if you miss out one, okay, and they've, see, in this new Companies Act, they have used this word minimum penalty. Now, this is something very dangerous. So even your ROC or Registrar of Companies or, Ministry of Government Employee, even if they wanted to levy a less penalty, they cannot do this. Earlier, like, we used to go to the ROC and we used to request them, we used to explain them. And sometimes, we used to use our relationship also. And they used to, bring down those penalty. Now, even ROC does not have a power. So it says, even, for a small company, private limited company, if you are giving any wrong information or you got caught in any of those, informations, okay, so minimum penalty is something like a 50,000 rupees. So this is again a very dangerous and very harsh also. But yeah, so because this annual return goes to the public, and of course, it goes to the statistic department of ministry also. Now, I'll just touch upon, because, it's going to be affecting, now, the AGM, all this company need to hold this AGM within the 9 months of the closure of the first AGM has to be, you're supposed to hold within the 9 months. Statutory meetings earlier, like, if you're incorporating a limited company, you need to have a statutory meetings. Now they've done away. Now AGM, see, now this is something which is new, which has come in this act, which says the AGM cannot be held on a national holiday. So there are 3 national holidays. Okay, so you have a 26th January, 15th August, and 2nd August. So barring these 3 days, you can hold your AGM anytime. Of course, during the business hour only. Okay, earlier also there was some confusion about the business hour. Now they have specifically written it has to be 9 to 6. So it means what? Now you can have this, annual general meeting, shareholders meeting of a company on even Sunday also, on a public holidays also. Yeah, not on a national holidays, okay? So barring these 3 days, you can have a AGM anytime. Okay, so it says, AGM has to be between the 9 a.m. to 6 a.m. Shorter notice for a private limited companies. And now see, there is another change in the shareholders meeting which says, uh, if you have 1,000 members, you need to have a quorum, five numbers, at least members should be present. At the same time, if you have shareholders more than 1,000 but less than 5,000 shareholders, the minimum quorum is required, you need to have a 15 shareholders to be present. And the third is, if you have a more than 5,000 shareholders, you need to have at least 30 shareholders to be present. Now this is, I'll tell you, like, this was the section which got implemented very early. So I've seen many of the companies, they have to postpone their AGM because, they could not even have this minimum quorum. They could not even, get those 15 shareholders, for the AGM. So probably those AGM got postponed for 1 week. Proxies, now we cannot have a more than 50 proxies. Earlier, like, the one person used to collect so many proxies. Now you can have, one person can have a maximum to 50 proxies. And again, the value wise also, not more than the 10% of the shares value. And of course, earlier, like, company used to spend the money to collect those proxies. Now what it says, you cannot spend the company's money to collect those proxies. So at any point of time, if any of the directors found guilty, there is a penalty, which is 1 lakh. There is a change in the depreciations. Earlier, like, you have to have the percentage. Now it talks about the concept of the usefulness of the life. So if I'm buying a mobile, which I know, this is going to last for one year, of course, then probably I can write off 100%. So usefulness of the life. See, this is again which is unique section, and of course, many of the corporate has objected to this. What it says, at any point of time, if anybody has not claimed their dividend, okay, if they have not claimed their dividend for 7 years, it's not, the dividend amount will go to the government, the government kitty, but even your share also will go to the government kitty. Now, this is again a very, very funny sections. The financial statement now covers the cash flow also. So for a private limited company, not only the balance sheet, profit and loss account, you are supposed to prepare the cash flow also. As I said, uniform accounting. Now, only thing, there is a concern being shown by the chartered accountant firms, because what they are saying, if you have a uniform 31st, year ending, probably they'll not be able to, do the audits, because, those audit, you have to do it within the time. So would create a pressure on the chartered accountant, independent directors, because, independent directors also will have to run around here and there. And of course, those accounting standard they have to revisit, and probably the chartered accountant institute has to come out again. Now, electronic mode you can have consolidated. I'll just run through it. Now, see, there is a provision in this new Companies Act which says you can, reopen those financial statements at any point of time if the central government or income tax department authority or SEBI, okay, and other statutory regulatory bodies in the following circumstances, they can open the accounts. The relevant accounts were prepared in the fraudulent manner, or the affairs of the company were mismanaged. So it's not only government, but it gives a power to the directors also. So at any point of time, if the directors feels my account has not been prepared properly and this and that, it can go to it appears to the directors of the company that A, financial statements of the company or the report of the board of directors do not comply with the provision of section so and so. Company can make an application to the National Company Law Tribunal. So even the company can go to the tribunal and say, look here, I wanted to reopen my accounts and the director's report. So there is something which has happened, NFRA, National Financial Regulatory Authority. Friends, some of this, there were so many episodes has happened, like Satyam, the auditors, even the auditors are still roaming free. But the same Pricewaterhouse and Cooper, they've been fined heavily, outside India, and they have to pay those fines within those, 6 months of those episode. Unfortunately, India still it is not happening. But now, this ministry they came out with the NFRA, where the disciplinary mechanism of the chartered accountant, they have taken a control. Now, probably it is only the chartered accountant institute. No other institute has this, NFRA. So, like Company Secretary Institute or the Cost Accountant Institute, they still have their own independent disciplinary mechanism. Now, see, friends, this Chartered Accountant, Company Secretary, Cost Accountant, all these three institutes, we have our own disciplinary mechanism. So, at any point of time, any members are found guilty, We have our own team who penalize him. We suspend him, that particular chartered accountant or a company secretary, for a 1 year, 2 years. Sometimes we debarred also from the membership. Probably, those disciplinary mechanism probably has not worked as per the expectation of the government. So this disciplinary mechanism has been taken over by the government. So this is very big blow to a chartered accountant fraternity. And of course, now even this accounting standard and all those stuffs, will come to this NFRA. And NFRA, with the consultation with the Chartered Accountant Institute, they will approve it. Of course, now the board of directors, like, as I said, annual return is going to be more bulky. Your director's report is going to be more bulky. So your director's report for a private limited company will run into some 40, 50 pages. And if it is a listed company, probably more than that. Because you are supposed to provide so many information, including some part of your annual return, you are supposed to attach to your director's report. CSR, I think, much talked about. These are the criteria: net worth 500 crores, turnover is 1,000 crore, net profit 5 crores. Okay, but it is still not mandatory. So in case if I am not spending on a CSR, I need to just disclose in my director's report or my annual return that I have not spent, because I wanted to conserve my money, whatever matter. Internal audit, now see, internal audit for every listed company, they need to have the internal audit. Of course, for a listed company, irrespective of that capital and all, they need to have a internal auditor. And it also talks about the unlisted company with those criteria like capital of 50 crores, turnover of 200 crores, outstanding 100 crores, deposit 25 crores. Okay, and if they have accepted any deposits. Okay, and every private company having, so they have covered this private limited companies also. They need to have the internal audit department. And now, the time started, from the 1st April 2014. So by September 14, they need to have an internal audit department. Only one thing, what they are saying, for an internal auditor, you can have your own employee, working as an internal audit. So you need not have to go to the chartered accountant firm again. Auditors, of course, the 5 years plus 5 years, Friends, I think, I'll just conclude my presentation here. We have a very specific presentations. My colleague, Anshul Jain, will give you a presentation, the sections which is going to affect the broker companies. So he has prepared a presentations, the section which is, going to be directly hitting the brokers, and, you need a immediate attention and the compliance also. So thank you, friends.
So thank you very much for giving us this enlightened presentation regarding new provisions of Companies Act. Now, before I call our second speaker, Mr. Anshul Kumar Jain, I'll just briefly introduce his profile. Mr. Anshul Kumar Jain is a BCom FCS. He is a company secretary by profession. He is presently partner in Mehta & Mehta. He has considerable knowledge in the field of secretarial, legal and compliance. He has worked with the ITC Group, Edelweiss Group and SSJ Finance Group. He is handling matters related to secretarial, legal, especially investor complaints and exchange arbitration and broking compliances, including AML. Apart from this, he is a regular speaker in various programs of WIRC, of Company Secretaries Institute and even Chartered Accountant Institute. And he was the chairman of Bhopal chapter of ICAI. With this humble introduction, I would request Mr. Anshul Kumar Jain to carry forward with his presentation.